Dorothy was sitting alone at her dining room table on a quiet Wednesday morning, holding a medical invoice for $923. Her fingers trembled as she read it. She is 74 years old. Her only income is her Social Security check, and that bill, that piece of paper in her hands, was for a hospital visit that happened 4 months earlier. She assumed she had no choice but to pay it. She had always paid what she owed. That is simply the kind of person she is. But here is what Dorothy had absolutely no idea about. She was fully protected under federal law. That hospital was violating federal regulations by sending her that statement. And on top of that, she had already handed over $289 from earlier invoices she never actually owed in the first place. Dorothy is not an exception. At this very moment, millions of older Americans across the country are writing checks for bills they are legally shielded from paying. Bills the federal government has already declared they should not owe. Bills that are quietly draining their fixed incomes every single month without anyone saying a word. If you are 60 years of age or older, please keep watching, because what I am about to walk you through could return hundreds or even thousands of dollars to your pocket before this year is over. My name is Masha. I am a senior policy analyst and retirement finance specialist here on TaxWise Seniors. My purpose is to take the complicated language buried deep inside government regulations and convert it into straightforward, everyday English, so you can safeguard your money and maintain your peace of mind. Today, I am going to take you through 5 specific types of bills that countless seniors continue paying even though federal law provides them with strong legal protections. I will give you the precise rule, the exact form, and the specific phone number you will need to act. And please do not leave before the very end, because there is one critical error I see seniors repeat over and over again, an error that can erase every single protection I am about to describe, even if you follow every other step correctly. This one mistake can cost you everything you worked for. I will bring it up near the end of this video. Before we get into the 5 bills, let me tell you about a man named Gerald. Gerald is 68 years old. He is a retired letter carrier from Indiana, a hard-working, dependable man who gave 44 years to his career, paid every dime of tax he owed, and never once missed a payment. When Gerald reached 65, he enrolled in Medicare. He was confident he was handling things properly. He even paid a small medical bill that showed up in his mailbox without pausing to question it, because that is the kind of man Gerald is. But about 2 years later, his son was helping him go through a pile of old paperwork and noticed something that did not quite add up. Gerald had been enrolled in a special program called QMB, the Qualified Medicare Beneficiary Program. His state Medicaid office had placed him in it automatically because his income fell below the qualifying threshold. That program meant Gerald was completely legally exempt from paying Medicare deductibles, co-pays, and co-insurance. Federal law, written in plain black and white. But for 2 full years, Gerald had been paying every single statement that arrived in the mail, every doctor visit, every laboratory charge, every prescription copay. The total came to over $3,100, money he never owed, money that could have gone toward his electricity bill, his grandchildren's birthdays, or his blood pressure medication. And here is the part that truly breaks my heart. When Gerald contacted those medical providers to ask for his money back, nearly all of them returned it without any resistance, because they already knew the rules. They were aware they were not permitted to bill him. They were simply counting on the fact that he would never find out. Do not let that be your story. Let us now go through the 5 bills, one at a time, carefully and clearly. Bill number 1, the Medicare Part A Premium. Here is what Medicare.gov officially states. The vast majority of Americans pay absolutely nothing for Medicare Part A. That is the portion of Medicare that covers hospital stays. It is referred to as premium-free Part A. You are eligible if you or your spouse paid Medicare payroll taxes for a minimum of 40 work quarters, which is roughly equivalent to 10 years of employment. For most retired Americans, that qualification is automatic. In 2026, individuals who do not meet that requirement may pay up to $565 each month for Part A coverage. But if you worked your 10 years, you owe $0. Now here is where many seniors get confused. Some people believe all parts of Medicare are free once they turn 65. That is not accurate. Part B still carries a monthly premium of approximately $185 in 2026, and that amount climbs even higher if your income exceeds certain levels. So Part A is typically free, Part B is not. Please hold on to that distinction. One more important caution. If you are still employed at 65 and you decide to delay Medicare enrollment because your employer provides health coverage, you could face a late enrollment penalty down the road. That penalty can stay with you for many years. So before you make that call, speak with Medicare directly. The form you may need is labeled CMS-18-F. Write that down somewhere. You will not lose it. Bill number 2, Medicare cost sharing for QMB enrollees. This is Gerald's situation, and it may very well be yours as well. The Qualified Medicare Beneficiary Program, commonly known as QMB, falls under what Medicare refers to as the Medicare Savings Programs. It is administered through your state's Medicaid office. If your monthly income falls below a set limit, you may already be enrolled and have absolutely no idea. And here is what federal law says in straightforward language. Under Section 1902 of the Social Security Act, federal law strictly prohibits doctors, hospitals, pharmacies, and every Medicare provider from billing a QMB enrollee for any Medicare deductible, copay, or co-insurance. The amount you owe is $0, period. The Centers for Medicare and Medicaid Services, which is the agency that oversees Medicare, classifies it as improper billing when providers send you a statement regardless. And unfortunately, it happens constantly. So how do you find out whether you are enrolled in QMB? Start by looking at your Medicare summary notice, those quarterly documents Medicare sends to your home address. Your QMB status is now displayed directly on that form. You can also dial 1-800-MEDICARE, which is 1-800-633-4227, and ask them point blank, "Am I a QMB enrollee?" If the answer is yes, and you have been paying medical bills, contact those providers and formally request a refund. Reference CMS Publication 10239, which is titled 3 Tips for People in the QMB Program. That publication specifically instructs providers to cease billing you and to return any payments they have already collected. This single piece of information alone could be worth thousands of dollars to some of you who are watching right now. Bill number 3, Federal Income Tax on Social Security and Tax Filing Requirements. This one involves more detail, so I want you to follow closely. According to IRS Publication 554, which is the official federal tax guide specifically written for older Americans, your Social Security benefits are completely free from federal income tax if your combined income falls below $25,000 as a single filer, or below $32,000 if you are married and filing jointly. So what exactly is combined income? It is calculated by adding your adjusted gross income, plus any non-taxable interest you receive, plus 1/2 of your total Social Security benefits. Add those 3 figures together. If the result falls below those thresholds I just mentioned, your Social Security income is not taxed at all. And here is something else that many seniors overlook entirely. If your total income for the year falls below the standard deduction amount, plus the additional deduction available to individuals age 65 and older, You may not even be legally required to file a federal tax return at all. There is also brand new tax relief worth mentioning. Under the One Big Beautiful Bill Act, for tax years 2025 through 2028, Americans who are 65 years of age or older receive an additional $6,000 deduction layered on top of everything else already available to them. This benefit gradually phases out for higher earners above $75,000 for single filers or $150,000 for joint filers. But for the majority of seniors living on a fixed income, this represents a very meaningful financial break. Now, please do not walk away with the wrong impression. This does not mean seniors are entirely exempt from federal taxes. If your combined income is on the higher end, up to 85% of your Social Security benefits can still be subject to taxation. So knowing your specific numbers matters. And here is the reassuring part. You do not have to work through this on your own. The IRS operates a free program called Tax Counseling for the Elderly, or TCE, designed specifically for taxpayers who are 60 years of age and older. Trained and certified volunteers will prepare your entire tax return for you at absolutely no cost. Visit irs.gov and search for the phrase free tax return preparation to locate a site near your home. Bill number 4, debt collectors and federally protected benefits. This one could protect your entire bank account. If a debt collector ever contacts you and threatens to seize your Social Security income, I need you to stop. Take a slow breath and pay close attention to what I am about to say. Under Treasury Regulation 31 CFR Part 212, when a bank receives a legal garnishment order targeting your account, that bank is required by federal law to automatically set aside and protect 2 full months of any directly deposited federal benefits. You are not required to submit any paperwork. You do not need to call anyone to make it happen. The bank is legally obligated to do it on its own. The categories of protected benefits include Social Security, Supplemental Security Income, also known as SSI, Veterans Benefits, Federal Civil Service Retirement, Railroad Retirement, FEMA Disaster Assistance, and Military Retirement Annuities. SSI receives an even higher level of protection. SSI is completely shielded even from government debts and even from child support claims. No creditor can touch it. But here is the dangerous trap that catches many seniors off guard. This automatic protection only applies if your benefits arrive through electronic direct deposit. If you are still receiving a paper check and depositing it at the bank yourself, you forfeit that automatic protection entirely. Your whole account can be frozen, and you would be forced to appear in court to demonstrate that the funds are legally exempt. So, step 1. If you are still receiving paper checks, switch to direct deposit immediately. Contact Social Security at 1-800-772-1213 or visit ssa.gov to make the change. One critical distinction worth noting. While Social Security is shielded from most private debt collectors, it can still be garnished to satisfy federal tax obligations, federal student loan debt, and court-ordered child or spousal support payments. SSI cannot be garnished for any of those reasons. Know the difference. The Consumer Financial Protection Bureau, also known as the CFPB, even provides a free template letter you can send directly to debt collectors asserting that your income is legally exempt. You can access it at consumerfinance.gov. Bill number 5, TSA, Screening Accommodations for Travelers. Age 75 and older. This one is specifically for those of you who still enjoy getting on a plane. If you are 75 years of age or older, the Transportation Security Administration officially provides enhanced screening accommodations at airport security checkpoints. You are not required to remove your shoes. You may keep a lightweight jacket on your body. If you use a walker, a wheelchair, or any other mobility assistive device, you are entitled to alternative screening procedures that accommodate your situation. And if a dedicated lane for older travelers is not available at that particular airport, you may use the TSA pre-check lane for that screening purpose. Now, to be transparent, this is not quite the same as avoiding a direct financial charge. The TSA does not bill passengers a separate screening fee. But here is the practical financial point. A significant number of seniors over 75 pay $78 every 5 years to maintain TSA pre-check enrollment. And in most cases, they genuinely do not need it. You already qualify for comparable treatment at the checkpoint simply by virtue of being 75 or older. And if you have a medical device such as a pacemaker or an insulin pump, or if you have any physical condition that makes standard airport screening particularly uncomfortable or difficult, you can reach the TSA Cares helpline at 1-855-787-2227. Place that call at least 72 hours before your scheduled departure, and they will arrange personalized assistance for your situation. You may also request a private screening area and the right to have a companion present with you at any point during the process. Do not allow unnecessary fees or stressful airport experiences to keep you from being with the people who matter most to you. Now, I made you a promise earlier, and I am going to keep it. I told you I would reveal the one hidden mistake that can completely undo every protection I just described. Here it is. The biggest and most damaging mistake seniors make is assuming the government will automatically apply these protections on their behalf. It will not. Federal exemptions, legal protections, and consumer rights do not enforce themselves without your participation. You must claim them. You must speak up on your own behalf. You must ask the question directly. Gerald paid more than $3,100 in bills he never legally owed, simply because no one informed him about the QMB program. The hospital was aware. Medicare was aware. But nobody said a word to Gerald. Dorothy nearly handed over $923 because she assumed that if a bill arrived in her mailbox, it must be valid. The protections exist. The laws are written in your favor. But the system functions most smoothly when you remain uninformed. So your greatest tool is knowing your rights. Let me leave you with 3 specific actions you can take this week. Step 1. Go to Medicare.gov or call 1-800-MEDICARE and ask directly, am I currently enrolled in any Medicare savings program such as QMB, SLMB, or QI? If the answer is yes, request a detailed summary of any bills you should not have paid over the past 2 years and reach out to each provider to request a full refund. Step 2. Verify that your Social Security and any other federal benefit payments are being delivered through direct deposit and not through a paper check. Call Social Security at 1-800-772-1213 or sign into your account at ssa.gov to confirm. That single action protects your money from improper account garnishment. Step 3. Start a dedicated folder, a real physical folder for every bill you receive, every Medicare summary notice, every Social Security letter, and every relevant bank statement. If something appears suspicious or incorrect, you will have the documentation right in front of you. Your information is your most powerful defense. Before you close this video, I want to ask you to hear one more thing. YouTube's notification system is not always dependable. The platform's algorithm determines what appears in your feed and when it appears. And the rules I shared with you today are subject to change. Medicare revises its figures annually. The IRS updates its income thresholds. New pieces of legislation like the one mentioned in today's video are introduced and modified regularly. So do not rely solely on this channel to stay current. Add Medicare.gov to your bookmarks. Add SSA.gov to your bookmarks. Add IRS.gov to your bookmarks. Those are your official federal sources. We help you make sense of what they say. They make it legally binding, and if any part of this video helped you, even just one single point, please share it with another older adult in your life, a neighbor down the street, a friend from your place of worship, your brother or sister. Because the seniors who suffer the most are always the ones who simply never receive the information.